Bloomberg Audio Studios. Podcasts, radio, news.
This is the closing bell on the Stock Movers Report. The companies making moves at the close of U.S. trading with Carol Massar, Tim Stenovec, Romaine Bostick, and Katie Greifeld.
All right, guys, let's go do some individual gainers, if we may. Marvell, that is your number one gainer in the NASDAQ 100, a gain of about 18% for the Friday trade. Chipmaker saying its year-over-year revenue growth rate will accelerate each quarter throughout fiscal 2027, so definitely seen as a bullish sign, but also a bullish target that shows soaring demand from data center-related applications. So some enthusiasm on that and what has been some nervousness, certainly, with the AI spend trade. Hey, let's go on over to Costco. This was a top performer a little bit earlier in the NASDAQ 100, but still finishing the day with a gain of about 1.6%. Quarterly profit rose more than expected. Membership fees, something that was being watched closely, totaling $1.36 billion during the quarter, beating expectations. And the company says it's gained market share as its bulk sizes and unique selection of goods draw in shoppers looking for value. I also heard something about selling cakes or something, that apparently that is something of interest. So anyway.
Cakes?
People love never sold Costco cakes.
I guess it's a strategy going forward. I don't know. I mean, who doesn't love a cake? Let's go on over to Boeing, up about 4%. Number two gainer, I know, no segue there. Number two gainer in the S&P 500. Boeing closing in on a 500.
Cake delivery, Carol. That's the segue.
Cake delivery.
On a plane.
On a Boeing. Wow. No moss grown over there. Well done. Well done. He's always here for me. Boeing closing in on a 500 aircraft order for 737 MAX jets to be unveiled when President Trump travels to Beijing for his first state visit to China since 2017. Two sides are said to be in talks for a wide-body sale that includes about 100 Boeing 787 Dreamliners and 777X jets, which would likely be announced at a later date if this materializes. Keep in mind, this is not a confirmation. It would cap years of negotiations between Boeing and China's airlines and a lengthy order drought from the world's second biggest aviation market. This is big news if this ultimately happens.
It's a huge order.
And it's a huge market for Boeing. And as we know, China is also working on developing its own jet market.
Yeah, the COMAC.
Yeah.
Okay.
This guy loves planes.
To compete with the 737. Let's talk about some alternative asset managers, including BlackRock, that took a hit today, down 7.7%. This after a series of negative private credit events stirred fresh concerns over the health of the industry. For BlackRock specifically, it was about the company, the asset manager, curbing withdrawals from its $26 billion HPS corporate lending fund after client requests for redemption spiked. It capped repurchases at 5%. It just adds to the worries that have been plaguing the private credit industry, and we saw other alternative asset managers fall today as well. Taking a look at airlines, because they have been under serious pressure in recent days over the war in Iran. We saw travel stocks take a hit. Online travel agencies are sliding too. Oil prices higher. That's a bad thing for all of these companies. Also, add on that jobs report that we got earlier today, and that could mean a consumer that is less willing to spend on stuff like this. The airlines industry, and actually airline stocks, down a little more than 20% from the highs just about a month ago. This is the S&P 1500 Airlines Index. That's down 22% from February 6th. So that's officially in a bear market. We also did get a note from an analyst over at Deutsche Bank that said that the price of jet fuel and oil, the spread between those during the war, poses an existential threat to U.S. airlines. So keep an eye on airlines as we do enter a bear market for that industry. And finally, shares of Gap taking a hit today, falling more than 14%. This after the company reported fourth quarter sales and profit that came in slightly below expectations. Old Navy and Athleta missed comp sales estimates. Gap and Banana Republic did beat. The company, though, forecasting a better profit than expected for the current year, and sales within estimates.
Yeah, and just an honorable mention, too. I just want to point out the chip stocks here. We did see the Philadelphia Semiconductor Index close down about 4%. And, of course, a big drag lower here because of a lot of those issues with apparently whether that AI spend is continuing. A great scoop earlier today that Oracle and OpenAI apparently dialing back their plans for that Stargate, that big Stargate data center down there in Texas. Meanwhile, we take a look at the yield space, and it was quite an interesting week. In fact, the biggest weekly sell-off that we've seen in benchmark Treasury yields since at least last April amid all of the Liberation Day ructions. Those are the numbers on a daily basis. And the reason why they're basically flat is because there was really the push-pull because between the concerns about what's going on in the Middle East and concerns about, of course, what's going on with that jobs report. Of course, a jobs report that would actually suggest the potential for a cut in rates. But, of course, the inflationary pressures and what's going on in Iran actually maybe potentially making the case to actually hike rates. Overall, we're higher on a weekly basis on your 2-year by about 18 points, on your 10-year by about 20 points from where we were just last Friday.
Yeah, I think we're at this interesting moment in time, and I think everybody says, I was reading a Bloomberg column, we have to get an idea of how long this war is going to last, because that's going to certainly determine the impact. I mean, we're looking at what? WTI crude up almost 40% this week alone. Yeah. So, you think about the jobs report this morning, that was weaker than forecast. You've got inflationary pressures that are still out there. Dare we say stagflation? And you just think about the predicament this presents, not only for the U.S. economy, but the global economy and for central bankers around the world.
We spoke to Ellen Wald of Transversal earlier. She wrote the book on Saudi Arabia and Aramco, Bailey. Mm-hmm. And she said if this crisis, at least from an oil perspective, from an energy perspective, doesn't get solved next week, we're already on the cusp of a crisis, and we could see a full-blown crisis. She said we could see $120 a barrel oil in a very short period of time if this doesn't get figured out.
And I have to imagine the knock-on effect, like we've been talking, what does that ultimately mean for inflation? What does that mean for consumers? And certainly when you see a VIX that's getting back towards 30 and you see investors selling down companies exposed to the AI bubble, what does that mean, Romaine?
Well, but also on the energy front, too. I mean, we talk about that $90 a barrel. 91, Carol Massar. We were at 81 yesterday. And we were at 60 just a little while ago. But it's already fed through. I mean, if you look at on your Bloomberg terminal, AAA gas prices on a weekly basis, they're up by about 10 to 11% here. That's the price that you see at the pump, the average price, we should point out. But it's actually now up 6 straight sessions. It had already been rising prior to that. In fact, it had actually been up for about 4 straight weeks prior to this week here. And that starts to become the real impact. The potential economic drag that I think a lot of us were hoping we would avoid. That's why you had folks like Mohamed El-Erian talking about stagflationary winds blowing. And I don't know if you saw all the Fed speakers that Mike McKee had on today. I mean, look, it's front and center. And when's that meeting? That's like in a week and a half, but they got to meet and start talking about this stuff?
Yeah, exactly, right? And so what do they do? So, with inflationary pressures still above the Fed's target, it continues to be that way. You've got to kind of assume that the Fed is going to be very careful and certainly not do anything, certainly not a cut, but certainly, have to be on their inflation watch, right? Exactly.
Yeah. What does Kalshi say? Are they going to pay out if I win?
It's a good question.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.